Traders, in today's video we're going to talk about how to trade the market only using price action. And price action trading means we're relying only on the candlesticks alone as they are printing on the chart. As you guys can see, I have a 21 bar EMA on the chart. This is just a supportive indicator, but it serves as one of key entry points. We're going to talk more about that. And normally in Wednesdays I record my live trading session, but today I was so engaged with the Discord that when I was recording my trades, I was barely talking, I was stuttering, I wasn't really explaining as I would like, and it is really unwatchable. So I decided to really cut the fluff, and I'm going to show you all the trades that I took, but I'm going to explain and go through today how you trade the market using the tools that we have. So the first thing that we need to do before we start trading, we need to do our pre-market analysis. And when I entered, this was all I would see. And as you guys can see, what I can do something like, let's say, for example, like this. And this is a nice looking trend line, but you keep making new highs, you keep making new highs, and you keep making new highs. What does that mean? That means that there's a bigger pattern in play, and there are multiple opportunities. You can do something like this, but this doesn't really fit off the top that much. What I ended up doing is I ended up finding this channel right here, and it really fits quite well. You have an overshoot right here, an overshoot over upper trend line in this particular instance a lot of times lead to break of a channel or possibly straight up reversal. Okay, so every time you see an overshoot, just expect the momentum in the opposite direction to pick up. In this instance, we just push back above the EMA and an uptrend resumed. Why am I drawing this channel? Because after we have a break of a channel, we are expecting new extreme according to trend line rules. In this instance, however, it didn't happen. This is one of those rare occasions that we just broke and we continue working in the opposite direction. So when I was watching this, I was still expecting price to push above the EMA and continue working higher. It didn't happen, and the EMA held prices. All right. And since the EMA is holding prices, take a look how the momentum is shifting. You have a triple top, you have a strong push below EMA. This indicates strong bearish momentum. Okay, you push below EMA and you're continuing working lower. Since you're continuing working lower and lower, and we don't have a new extreme, this is where I found the first trend line for the day. You just copy it, put it to the other side, and you get a nice confirmation of the lows. A lot of times you can find it and confirm it off the lows. You don't just have to look at it off the highs. And right now, look how far we've already moved. And this is the new low. We're in a downtrend now. Okay, forget about looking for longs right now for a new extreme. The EMA is supposed to be holding right here, and it didn't. Okay, the big bearish bar and the big move down indicated that, you know, there are no buyers in the market. And since we are pushing lower, we're looking for second entry shorts. That's a high probability setup, two-legged pullback. So we're pushing lower. This is the new low. First entry short, pullback, second entry short of the key entry point. I didn't like this setup yet at time, and looking back, that was my mental mistake. I was really patient. I wanted to trade after the market opened, but a lot of traders took this trade, and this was a good job on their part. I was probably sitting on my hands too patiently. I was really wanted to take the trade after the open, but this is a second entry short of the key entry point in a downtrend. And look what you have here. You have a first break of this channel. So what you are expecting, you're expecting for price to create a new extreme, and this all happened instantly. This is right at the open, and this was extremely impossible to take setups of this trend line or any setups right here. This really happened or extremely quickly if you were trading this, but the price action basis is still the same here. You have a first break of this downtrend and you are expecting new extreme. And here was the first trade that I took for today, a slightly aggressive trade, and I'm going to mark what I forgot to do, the low of the day. You always want to find the low of the day or the high of the day, as they will come into play multiple times. They came to play here. You guys can see they came to play right here. Now, as we created a new low right here, I'm going to show you guys quickly what I was looking at. As we created a new low right here, I've took a look at this downtrend, and it was really strong downtrend. And the low of the day is your first target for the day when you're coming from the highs, and this is looking like a trading range. Okay, this is move up and move down, so I'm expecting a push lower. And a lot of times you get two legs to a new extreme, and this is a two-legged pullback. You have a short-term uptrend with the break, new extreme, first leg, second leg. This is a first entry short, second entry short, which is a high probability setup. Where at the key entry point. This was the first trade that I took, and market then created multiple legs to a first entry, hopefully for today. The signal bar didn't end too well though. The signal bar didn't end too well. I may pull the trigger and I'm in. And I'm going to go for 8 ticks, which is happening extremely quickly. Stop loss 1. This has happened so quickly, so I'm going to instantly move my target profit to break even. And I got stopped out. So this happened extreme. And look where you bounced. You're bouncing at the support. Now, the downtrend already played out with the break and in your extreme according to trend line rules. That is correct. And we're bouncing off the support. I was definitely stopped looking for shorts and I was only looking for longs. Okay, why we're looking for longs? Because the downtrend played out with the break, multiple X to a new extreme. This is a trading range. This is clearly a trading range. Trend up, trend down, and key level is holding price nicely, low of the day. This is still too close to the trend, to the EMA. I was really expecting a push a little bit lower, get far away from EMA and take the trade. It didn't happen and market kept rallying. What happens when you have a break in a new extreme? You expect correction or straight up reversal. In this instance, market didn't even look back and continued trading higher and higher. What is a reversal pattern? Reversal pattern is characterized by 2 failed attempts in the previous trend's direction. Previous trend was bearish and there's a first entry short, second entry short. You have to be above the EMA, but you're supposed to be touching the EMA. And here you already moved too far. So you're far away from EMA here and it is very bullish, but you moved already too high up. So this is not a good reversal pattern. You want to be patient. It is a little congestive. Price broke higher and then push lower. And once again, you just follow the trend lines. What do? You have this uptrend working higher. So what is the natural thing to do? You have a first break. You're expecting a new extreme higher. This is the only a first entry, and very experienced trader of the community took this entry. And I'm going to mark it even though it is just a first entry because this is such a strong move up. This was just an extreme rally up. We didn't even look back, and you're at the key entry point. Is a nice bullish bar. Me personally, I like waiting for those second entries, but you have a break and a new extreme. Okay, so the uptrend is supposed to be over. You're expecting correction or straight up reversal. And let me just copy this because as you keep working higher, you need to really extend the resistance because it's a clear trending. Look at this, from the lows to the highs, from the highs to the lows, from the lows to the highs. That's your main target. Okay, from the highs to the lows, you know, perfect training range. Now, as you created break in a new extreme, you're expecting possibly a reversal or correction. And look what you have here. You have a new extreme, first entry long, pullback, second entry long, failure. This is a reversal pattern. I took this trade right here and I got stopped out. Okay, and this is completely okay because nothing in price action is 100%. No strategy is 100%. If you're following the rules and you took this trade, you followed your rules, and it could have easily worked for 8 ticks, but it reversed, and that can happen. Okay, you don't pick and choose trades. You have a plan, you stick to it. If you start picking and choosing setups, because these reversal patterns, I made tons of videos and you guys see working over and over again. So if you skip this in the future, you are not experienced enough, your win percentage will go down because you will be not taking a good setup. So okay, this is all part of trading. You just have a losing trade. If you're flustered by the losing trade, and that can happen, you can start revenge trading. Just take a break, take a quick easy break, 5-minute break if you cannot handle your emotions, because trading is only psychological. You know, if you follow the rules, it is not that hard. So if you keep making a mistake like this, just take a break, take a quick easy walk, and the market will clear up afterwards. Okay, now we pushed strongly below EMA. We push strongly below EMA. Hold on. Well, this is happening once again very quickly. We push strongly below EMA, and I'm expecting a reversal because this is a reversal pattern. First entry long, pullback, second entry long, failure. We're below EMA. Right now we are going a little bit, this is not what you want to see. We didn't make a scalp on one single bar here. This is a big bullish bar. I might have gotten trapped here. We still got a few more room here in this bar, a few more ticks here. I still like the trade. First entry long, second entry long, failure. Below EMA, nice bearish bar. We'll see. And I got stopped out here. So I'm gonna mark this trade right here. Now looking back at this trade that I took, this trend was extremely strong and steep. Look how far you've already moved. You moved from here to all the way up to here, and it's just now probably going to reverse on a down like that. That was my mistake, and now it kind of makes sense in the hindsight. But I followed my rule. I was 1-to-1 for the day, and now the reversal is not happening. So is the second option, is the option correction. Okay, and look what you have. You have a double bottom right here. You push higher. Your first entry short, second entry short, but you're not looking to go short because the reversal pattern didn't happen. Okay, why you would be looking for shorting now when this reversal pattern fell and you have a big bullish bar, let's say right here, and another bullish bar? If the bears are active in the market, we were supposed to push lower on this reversal pattern, and it didn't happen. So you have to trade the market you have, not the market you want to have. Okay, not the market you wish to be like. So you are at the top of the trading range, so where you're probably gonna go to the bottom, and you have a first entry long, pullback, second entry long. Gorgeous setup, triple bottom right here. You even traded lower, and this is what is great about the setup. You traded lower, you trapped everybody in. Everybody got sucker in, going short direct into the support and instantly reverse at the very close of the bar. This is a bullish reversal bar. You're buying the support and market keeps pushing higher. And look what you have here. Does this look like a trend? No, this is a trading range. And the way you trade trading ranges, you fade the breakouts, you buy the lows, you sell the highs, or you fade the breakouts. All right, fading the breakout means buying the breakout in the opposite direction. And you push higher. And to be honest with you, I don't really like shorting this breakout out here because the bias was up. The bias was up, and if you're playing the trading range, you're expecting for price to go all the way from here, way up to here. So I was expecting for price to make one more push higher. It didn't happen. There was a lower high entry that, you know, pushed the market lower. This looks very great. I will actually mark it, but it was really hard watching in real time. After such a move up, you're expecting for price to get to the upper side of the trading range, and look at this strong bearish move down. But look what you have. Clear trading range, you have a failed breakout higher and you have a failed breakout lower. When I was watching this live, I was quite unsure about the price action as we just pushed lower. So when I saw first this bar, I wasn't really thinking about buying because this was fairly strong. But take a look what happened next. You pushed higher, created a gorgeous bearish bar, and everybody got suckered into this trade. At the very end of this bar, they just ticked below them and instantly reverse. And when you see such a nice bearish bar and everybody got suckered in, after all this move happened, when you're supposed to be fading the breakouts, if anything, you're supposed to be looking for buys. This is where I suddenly pulled the trade right here, pulled the trigger right here, and took the failed breakout, because this is how you trade the trading ranges. You fade the breakouts, you buy the lows, you sell the highs, and you fade the breakouts. That's the most reliable way to trade the trading ranges. And then the trading range actually moved a little bit higher because these two highs are now more important than this tiny. All right, guys, so I'm preparing my limiter as I'm going to take the setup right and manage to get. So I'm going to put my stop loss 1 tick below the signal bar. I'm going to quickly tighten it to 8 ticks and move my target profit around here. You guys can see we have automated strategy in play. We broke lower below this trading range and I was quite unsure what to do, but then we created this micro double top, sort of like a higher low setup and a nice bullish bar. We're still far away from EMA, and this is now a confirmation of a failed breakout because everybody got trapped going short right here when this is a failed breakout of trading ranges, and you wanna fade these breakouts. Most breakouts of trading ranges will fail. So let's see, we're pushing higher, so I'm gonna mark this entry right here. On one for one today, so it would be good to have a winner and catch some nice runner potentially. But right now we're halfway in. Come on. The price action got fairly confusing here, and by the field, perfect. So I'm gonna move my runner all the way up to here. So we're 2-1 for the day, and hopefully we can catch some good runners so I could call it a wrap. Okay, so don't forget to draw your short-term trend lines in trading ranges as well. Okay, we have this, and it was a quick easy scalp. My runner got instantly stopped out. You have a new extreme, first entry short, pullback, second entry short, failure. I would really love to see price to push above this support, or at least above the EMA, and it's starting to get a little bit congestive, like too many stims. So I think it's better to sit in your hands. Market push higher, and created a gorgeous entry off the EMA, but the signal bar is really big. I will mark it as an aggressive entry because you want to enter with the limit order a little bit back, and you probably would have got left behind because this is a very big quick move. But you're back from the failed breakout, back above the EMA, and you're coming off the lows of a trading range. So where you're expecting for price to go, all the way up to here. And look what you have here. You can even find a channel like this. You have multiple breaks, new extreme, break, new extreme. And what is this? Once again, a failed breakout. And look how far away you are from EMA. Do you see how far away you are from EMA? This was a very steep move up. You're quite far away from EMA here. The further away from EMA you are, the better when you're fading the breakouts. And I know it is a little bit counterintuitive for new traders to fade these breakouts, but you have no other options. If you are playing the trading range, you have to fade the breakout. The market pushed lower and kept pushing lower and kept pushing lower. You have actually a new high right here, first entry long, second entry long, but this is not a reversal pattern because you are not below the EMA. You actually closed above the EMA, and there's a lot of bars going sideways and a lot of stims. If this bar closed below EMA, then this would be a reversal pattern, but it didn't happen, and you pushed lower. And once again, you're pushing lower, and you have a new low right here, first entry short. You're not probably expecting to go short at this point right here because it's looking quite congestive. But take a look what happened right here. You have a nice bullish reversal bar. You ticked one tick lower and instantly reversed down, big bearish bar, and you close once again below EMA. And this actually confirmed the trend line that you are eyeballing, because once you have a first leg pullback, second leg, you think the downtrend is over, but we turned down from here, from this point one more time, and it looked like it's going to go long, and everybody went long into this trend line. This is only good because it trapped everybody in and instantly reversed, working lower. Okay, so hopefully that makes sense. You're coming off the highs of a trading range, where most likely to the bottom. And take a look how you keep making new lows, and this downtrend is suddenly now proven. And take a look what happened. You're trying to push lower, but you have no clear entry to fade the breakout. But do you want to even fade the breakout? Here's the question. Whoops, the fading the breakout here is not the wise thing. Why? Because take a look how big and proven this downtrend is, and take a look at these. If you're fading this breakout, this is very steep move, and it's not clear and proven like this. The same thing right here. This is only like temporary steep impulsive move. You can fade here. Steep impulsive move, you can fade here. Now that you're actually in a proven downtrend and fairly strong, working lower, you don't want to be fading the breakouts. Okay, you don't have no setup either way. And what you have, look what we talked about here. Overshoot right here leads to the break. Overshoot of the upper side leads to the break of the trend line. So what you're going to do, you're going to find your short-term trend line. You have a break, new extreme. You actually touch this resistance that acted as a support, and you have a two-legged pullback up, and big bearish bar. Extremely tempting, but you're now above the EMA. It would be better probably to wait for a lower high below the EMA. It would be much smarter because it is quite because the overshoot can generate power to reverse, but you have such a clear, strong, proven downtrend that plus this uptrend played out, that you're still looking for a new extreme if you're following the trend line rules. So, but this is above the EMA, so I will mark it only as if I don't even want to mark it that much, because you're really above the EMA, and you really want to wait for a lower high below EMA. And market push lower, and two legs to a new extreme. So the downtrend played out according to price action rules. The downtrend played out, so you're no longer looking. It's the same thing right here. Take a look. The same thing like right here. Break, two legs to a new extreme. Actually, three legs, and the support is holding. What you have here: break, first leg, pullback, second leg. Support is holding, and we're bouncing off of it. And you are looking for either to take the buy here or to wait for a reversal pattern. I don't think you want to go long here because you're not quite touching you're not at this area yet. It is always better to be safer when you're buying or selling the highs or lows, to be even a little bit below the support. When you're coming shy like that, few ticks, it is better to be patient. You have a first entry short, second entry short right here, but we're not interested in that because the downtrend played out. You have to follow the rules. All right. So hopefully you guys found the video useful. If you do, please hit the like button, subscribe to the channel if you are interested in day trading, and I'm going to see you guys in the next one. So God bless everybody.